Good morning, everybody. It's March the 21st, and this morning I'd like to do the Cloud Chart ETF market review. We're going to look at the S&P 500 ETFs and the respective ETF sectors, corresponding sector ETFs, the spider sector ETFs, basically. So we're going to jump straight into the Pro Real-Time platform. We start off with the S&P 500. You can see here we've had a nice strong rally in the market the last couple of weeks, and the market's now ripe for a consolidation. So here we can see somewhat of a consolidation starting to take place in the S&P 500. Potential downside is towards the top end of the cloud here at 228.6. So we need a bit of a healthy retracement since the strong rally that actually started back in March in February last year. So this is on a weekly basis. Okay, so then we go into the daily chart. This rally that started back in November is now strong rally up, sideways consolidation period, strong rally up, and now we're busy with the other sideways consolidation period. Note that we've had a MACD sell signal here. It's not necessarily a short sell signal, but certainly took some profit off the table for this particular rally after the buy signal here on the 8th of February. So the market's now consolidating in a sideways moving pattern. I would note these 236 and 231 zones as a key support zone in this market. But overall, market, the S&P 500 in consolidation mode, busy with a pullback, a much needed consolidation pullback. One, watch out for a possible rebound when it gets to the top end of the cloud chart support levels. Okay. If we now jump into the material sector market here, sideways moving consolidation period underway. Looking for potential rebound from the top end of the cloud here. Whenever it gets back down to these cloud levels here, that's kind of the swing trade for the possible rebound from these cloud chart levels. Note we've had a MACD sell signal, and we're looking like we're about to make a MACD buy signal. So if you get the MACD buy within the cloud chart support range at the top end of the cloud, that would be a nice entry level. Real estate sector, after a tremendous sell-off, or not tremendous, could say just a consolidation sell-off, back to the top end of the cloud, rebounded from the cloud, and is now on its way back to retest these cloud chart support levels. So we'd be looking at a possible rebound when it gets to the 30-31 zone here for a potential rebound, and then the rally could last back up to the top end of the cloud here. Note that we've got a MACD sell there, which came through on the 6th of March. And we've still not had the MACD buy. So MACD buy signal in and around these cloud chart support levels would be something to look at. Consumer discretionary, steady uptrend in place, slight consolidation underway now. Watch out for these cloud levels here, top end of the cloud here at 86.46 looks like a pretty good support level. So that can be an area to revisit a trade in this name. We've had the MACD sell signal from a profit-taking perspective, so looking for a possible rebound when it gets to these key cloud chart levels. Consumer staples also in a much-needed consolidation mode after a strong rally up over February. We're fighting all cloud chart resistance levels here, and the top end of the cloud here is a key support zone. 54.71, 54.70 or 55 zone is a key support zone. So if it dips back into the support zone, that could be a nice entry point. But note, we should see it drift lower. We've had a MACD sell, and the downside potential is to drift to test support at the top end of the cloud here in the current consolidation. Energy Select in trouble here. We're trading below the cloud. Price actions taking place below the cloud. Note that these multitude of support levels is all cloud chart support level 6902, significant support level, and the bottom end of the cloud here back in November is 68 zone. So I would be looking at possible rebound when it gets to these levels. Watch out for the candlesticks to see if there's going to be support. Watch out for the MACD buy signal to come through. But so far, long-term trend is down based on the daily cloud and the front end of the cloud is down. So we are looking to trace short-term retracement rallies, relief rallies back up to the bottom end of the cloud. So looking for possible entry points in and around these cloud chart support levels, old cloud chart support levels that we can see back from November is now a next area to look for a possible rebound. Financials, also a bit consolidating after MACD sell signal. Watch out for these levels at the top end of the cloud here at 24, let me just see the 24.10. That should be the first level of support. And then the major support level is back here in the $23 level. But I would look at revisit the trade opportunity when it comes back to test this $24 and $23.75 zone as a potential rebound. And then watch out for a MACD, possible MACD buy signal in and around those levels. Healthcare, much needed consolidation underway. Watch out for these cloud levels here at the top of the cloud. First level is testing at 74.84. The next level could be these old highs here, which used to be resistance, which should come back as support at 73.76. That corresponds well with this cloud support level there. And then the major support level at 72.74, which would be a pretty hefty retracement there. But we've had the MACD sell signal, so it is drifting lower, and I'll be watching out for these 73.50, 73.60 as the first level to test for support there. Industrials also moving sideways, consolidating. Top end of the cloud here is key support zone. Watch out for 64.58 zone as potential support. Also, these hold highs here should now come back in to act as support in this current consolidation. But a much needed consolidation after a pretty strong rally and then a upward continuation pattern to above the cloud. Okay, but so far so good. Consolidating, busy with the pullback, and I'm looking to revisit this when it gets to cloud chart support levels. Okay, technology, ripe for a pullback, needs a bit of a consolidation, slightly extended. We've had a very strong rally since November last year, and we've had multiple buy and sell signals on the way up. We've had a MACD sell, so it's a bit consolidating now. Consolidation risk is increased now. With consolidation risk back down to the top end of the cloud, watch out for this $52 level as the first kind of major support zone to be tested. And then the 52.75 will be the first one to be tested, and then the 52 level, that would be a nice swing trade entry level to revisit a possible trade back into this name from a swing trade perspective as it's going to rebound from the top end of the cloud. But watch out, we've had a MACD sell, consolidation underway, and downside risk back down to the top end of the cloud here at $52. Utilities. Had a bit of a long consolidation period, a rally up, and now we're busy with another consolidation period, which could last quite some time. Support here is at the top end of the cloud here, these old lows here, as well as this $49.50, $49.90, $50 level as a key support level. So I would be revisiting this name, this ETF, when it gets to that level for a possible swing trade and rebound, but watching very closely for the MACD buy signal to give an indication of that. But so far, also in a consolidation mode. And the S&P 500 ETF, as we looked earlier to the S&P 500 market, consolidating on a new sideways moving base. So it could set itself up for another breakout out of that consolidation range. So we could see quite a lengthy consolidation here if we look at how long the previous one was. And potential support here is at 235.50 and then 231.55. But watch out, we would see probably a lot of support in and around this 235 zone for a potential rebound as it's going to test the top end of the cloud for support. Okay. Until next time, happy trading.